What is up, everyone? Welcome back to another credit card news live stream. I'm Cal Barton, and I just want to thank you to Danny. Thank you for the super chat. Let me find you here. You said your boy got an increase on the Barclays View MasterCard. My card is now at $3,400, and it's small, but you're still happy. So listen, congrats on the increase. And we're going to actually dive into that, into everybody's increases and all their wins later on in the stream. But congrats on that. And also, can you answer me this? Is that the Barclays card that was formerly the Uber Visa card, and they transferred everybody over to that Barclays card? And I want to say what's up to F. Davis. It's good to see you. Shanika, I see you. Who we got? Johnny Jimenez, welcome to the stream. Miss Barton, how you doing? Fred 2023, welcome to the stream. So let's get into the news. Right here, we're starting with Amazon is letting customers pay with Venmo at checkout. So here's what is going on here. Amazon is rolling out a new option for customers to pay with Venmo. Select customers will see an option at checkout to pay for orders on Amazon via the mobile app using the popular PayPal-owned payment service rather than using their credit cards. That's going to be good. I'm going to tell you why, because I can think of one big reason. If you don't have an Amazon account, but you do have a PayPal MasterCard, you will be earning 3% cash back on all PayPal purchases. So that's good. The option will be available to U.S. customers by Black Friday. To use this new option, customers can add their Venmo as a payment method on the Amazon account page and then select Venmo at checkout. The move is the latest example of Amazon looking to expand its checkout payment options for customers. Last year, Amazon partnered with Affirm to offer a buy now, pay later function for some purchases over $50. Next, we have MasterCard spending growth slows as firm watches inflation. So here goes inflation rearing its ugly head again. So MasterCard saw spending growth slow to its lowest level in more than a year as the company says it's watching the impact of inflation and other geopolitical risks on its business. MasterCard and its rivals have seen smaller increases in spending as inflation soars and Russia's invasion of Ukraine hinders economic growth globally. Payment companies are also facing tough comparisons to a year ago, when purchase volumes jumped as economies reopened following pandemic-related lockdowns. So listen, this is just another indicator that we have kind of tough times to come, and a lot of people are really talking about 2023 as really being a test for everybody. It might be a really trying time in the markets, in this global economic climate. Next, we have medical debt is forcing 42% of Americans to only make their minimum credit card payments. And listen, we all know you never want to make those minimum payments unless you absolutely have to, unless your back is against the wall, because when you make minimum payments, you're forced to pay interest on your credit card, and that quickly adds up month to month. So it's easy to assume that medical debt is a problem mostly reserved for the uninsured, but actually, plenty of people with health insurance, even good insurance, end up with medical debt. Between high deductibles and out-of-network charges, it's easy enough to rack up thousands of dollars in healthcare bills. Meanwhile, medical debt can be more than just stressful. It can also impact other financial decisions you make. In a recent Discover survey, 36% of those with medical debt stopped putting money into emergency savings due to having healthcare bills to tackle, while 27% stopped paying other bills. And 42% were forced to only make their minimum monthly credit card payments due to having medical debt. So listen, those medical bills are astronomically high. Those things can range, close to $100,000 for simple procedures. So it's that's a tough time there. Next, we have Synchrony, everybody's favorite credit card issuer. Synchrony, right? Everybody loves that, being facetious there. So Synchrony Q3 delinquencies hint at paycheck to paycheck consumer pressures. Synchrony financial differs from the other players because it offers the private label card that tend to be an option favored by consumers with relatively low credit scores. Synchrony's latest supplemental results show that its delinquency rate was 3.2% compared to 2.4% last year, and its 90 plus delinquency rate was 1.43% compared to 1.0% last year. What remains to be seen is how consumers juggle these balances, which is Synchrony's latest filings were up 8% to an average of $1,200 per account. So if you don't know Synchrony, and I know Danny, I'm just gonna shout you out here, buddy. Danny said, "Oh, Synchrony can make you feel like that," because what they did to Danny, and this happened to numerous people, is that they have a tendency to close accounts without you knowing, and it's totally within their their scope, and it's within their control how high your credit limit is. They can cut your limit down to just above your balance, and they can actually close your account just all of a sudden. And that's what happened to Danny. He had like 5 or 6 accounts closed, total amount of 50,000 plus in available credit just wiped out, and that can really affect your FICO score in a bad way. But Synchrony is known for giving you relatively high limits and giving you I have a few Synchrony issued and backed credit cards, because Synchrony is a bank that is known to produce co-branded cards. So they'll team up with Amazon, or they'll team up with PayPal, and they'll create this co-branded card and offer to general public. But they have some really bad practices where they'll close your account and they'll cut your limit without you knowing. So that's something to be aware of, and that's why you always want to diversify the banks that you're doing business with, so that you have credit limits available all throughout the credit card industry. Sorry about what happened to you, Danny. Where you at? You said all those who have Synchrony backed cards, be careful with them. Yes, be careful with them. Ellen Beck said, "What's up, Ellen Beck?" You said Wakanda forever. Yes, I can't wait for that movie to launch. It looks amazing. I just want to say that. So next story we have: many young people prefer buy now, pay later to credit cards, and here's why. Across generations, nearly 60% of consumers say they prefer buy now, pay later over credit cards due to the ease of set payments, the simple approval process, and lack of interest charges, according to a payment survey. Now, I just want to, before I forget, I want to make a note of that. They said they like the ease of payments. Well, if you set up auto pay on a credit card, then that's easy, right? The simple approval process and the lack of interest charge. So the approval process, I'll give you that. But there are a few cards, which I listed in one of my recent videos, that will approve you, will pre-approve you, which is really, it goes a long way to getting approved. You're pretty much 90% plus sure that you're going to get the card at that point. They'll approve you for the card, and they'll show you your initial credit limit. So there are a few cards that will do that for you. And he said, lack of interest charges. Well, there's an easy way not to pay interest with any credit card, and that's to pay at least the statement balance before the due date. And so that's how you get around that. So I don't understand where this logic is coming from. One reason young people in particular are drawn to buy now, pay later payment plans is because many watched their parents struggle with credit card debt amid the 2008 economic crisis. Well, listen, if you're in debt, you're still going to pay either fees or interest on any of these buy now, pay later plans. So I don't understand what this is like. The same difference. It's just slightly different flavor. Transparency about how long it will take to pay off a big ticket purchase is also key for Gen Z and millennial consumers. So it looks like they just want a very clear outline of a structured, evenly spaced, even amounts for every month. Told you from the outset, they want to have one purchase on their account, and it being clearly stated that this is going to take X amount of months to pay off. I mean, you could easily do that by yourself. But listen, buy now, pay later seems to be here to stay. A lot of people are really using this a lot. Also, U.S. consumer is is soldiering on despite soaring inflation and recession risk, credit card giants say. So U.S. consumers have demonstrated a willingness to continue to pay higher prices in the face of sluggish economy that could be tipped into a recession. According to credit card giants American Express and Bank of America, Amex said overall customer spending jumped 21% year over year, driven by growth in goods and services as well as travel and entertainment. The demand for travel is particularly resilient as Americans make up for postponed trips. They call that trip revenge, right? Isn't that the term? I love those terms that like you see on these different articles that they get coined. Like what's another one? The silent quitting, quiet quitting. You know, the credit card crunch. Like I love these terms here. These outlandish terms. Let's see. The demand for travel is particularly resilient, and consumers are also splurging on food and entertainment after a pandemic lockdown eased. American Express said its travel and entertainment segment saw spending climb 57%, so that's close to 60% from a year ago, with volumes in the international market surpassing pre-pandemic levels for the first time in the third quarter. So yeah, this is just pent up demand for leaving the house. People were cooped up. They felt scared. They didn't want to travel. And there were a lot of restrictions. You know, if you went to another country, you didn't know what sort of restrictions you were going to be met with. And you didn't know how that was going to change over time, how it was going to evolve. And if, you know, some country was going to just fully lock down on you and you didn't have a way to get home. So a lot of pent up demand for travel, and people are just willing to spend whatever to get out of the house. And they had cabin fever. So that's why the spending went up, I believe. So next we have how neobanks are helping consumers game credit scoring. Games credit scoring. And if you don't know, a neobank is generally means that it's a fintech. It's a bank that's primarily are fully based online, and just all the new banks that are cropping up all over the place, offering you bank accounts, cash money, management accounts like SoFi, for example. I bank with them. They're considered a neobank. I believe Ally Bank is considered a neobank. Chime as well. So about 1 in 6 Americans has a credit score below 619, according to the Consumer Financial Protection Bureau. And the CFPB, if you don't know that as well, is just an organization that is like an oversight agency for the financial industry. And they're like a watchdog group that will give fines, and they will decree that companies act well and in the best interest of the consumer. And you can actually go to the website. I have a link on my website. This is what my website looks like. And if you go to the bottom of my website, you can see a link to the CFPB, and you can file a complaint. If you ever have any problems with your credit card issuer, file a complaint and they should get back to you within 15 days. So another 23% have too thin of a credit file to score, or no file at all. That puts them in a credit trap. To build credit, these consumers need someone to give them a line of credit with which they can demonstrate good financial habits. But with scores that low, few lenders are prepared to offer them anything. Neobanks say they can solve the problem through a new twist on secured credit cards, but regulators are already scrutinizing their offerings. So this reminds me of a few different neobanks offering this. I know about I know that this one I just talked about. Even the X1 card, their claim to fame is that they will basically use Plaid to connect to your bank account, and then they will use their algorithm to determine whether your spending habits and your income is good enough to warrant giving you a credit line. So they're not looking primarily or at all at your FICO score like traditional banks do. And so that allows people that normally would go unbanked or would not be deemed credit worthy. And now all of a sudden, because you have a nice income and you have decent spending habits, now you have access to credit like you didn't before. And there's many other banks like that, offerings that I've seen that are really trying to gain market share, but they're also trying to tap into whole new markets of people that don't have these access to this credit. Also, I want to make a note here of thin credit file. And I touched on credit files in my last video, and I really think that, you know, it's basically when you have a thin credit file, it just means that you don't have too many accounts on your credit report. And if you don't have that many accounts, they don't have much data to go off of to determine whether you're credit worthy. So they want to see that you have revolving lines of credit, like credit cards, and installment lines of credit, like an auto loan or a mortgage. And they want to see a good mixture of that and a few accounts to thicken up that credit file, so that you can, you know, they can have a good, you know, baseline for determining how worthy you are. Danny said, I'm sure my credit file is thick. You should, yeah, thick was with 2 C's. Okay. That's what he said. I hear you, Danny. Also, the number of Americans without a bank account drops to lowest level in more than a decade. The number of American households that were unbanked last year dropped to its lowest level since 2009. A dip is due to, in part, to people opening accounts to receive financial assistance during that pandemic. Roughly 4.5% of U.S. households, or 5.9 million, didn't have a checking or savings account with a bank or credit union in 2021, a record low, according to a recent FDIC survey. Roughly 45% of households that received a stimulus payment, jobless benefits, or other government assistance after the start of the pandemic in March 2020 said those funds helped them compel them to open an account. So people were at home, they had more time, they took initiative to open these accounts. And it's easier than ever to open bank accounts now, because you can just do it from download an app and you open an account, get approved within seconds. And there's so many to choose from. And just so you know, that reminds me, SoFi and some other banks, now you're with these neobanks, you're getting a 2.5% annual percentage yield or interest rate on these checking accounts. It's really nice to have. I'm actually, every month, I'm like, wow, I got that much from just interest. When I used to bank with Bank of America, it was negligible. Like, it was just $0. So now if you have a decent amount in savings or in your checking account, you're going to get something, tantamount to a credit card's cash back rewards. If you just think about that, you're talking about tens of dollars, and it makes a difference, because that's like a small bill, that's a streaming bill. It makes a difference, So I definitely like that they offer better interest rates. Next, we have crypto company blockchain.com is issuing a Visa debit card. So Visa is opening its payment network to another major crypto firm a day after reporting earnings that topped estimates. This newest card from blockchain.com, which will be issued through fintech platform Marquita, comes with no fees and allows users to earn 1% back in crypto. The move follows a long-term trend of crypto companies working to make it easier for consumers to use their digital assets investments to pay for real-world goods and services, initially rolling out to U.S. customers with plans to expand to Europe by nearly early next year. Blockchain.com said its customer account linked debit card already has 50,000 signups for its wait list. So listen, if you're into crypto, now here's another option for you. Personally, I'm not. I've been very vocal about that. Not into crypto, but I am very patiently watching on the sidelines. But let me know in the chat, are you into crypto? Did you, if you are into crypto, which one do you prefer? Which one is your largest holding? Because I want to know, because what to look for. I would love to hear your thoughts on that. And if you haven't already, please like and subscribe. If you want to see more streams like this one, I do them every week, Sunday at 7 p.m. If you want to see more like this and you want to participate, you want to discuss, like this stream for me. Richard, you said, what's up, buddy? You said, let me get you in there. I'm into crypto. I have ETH and Algorand. You know what? ETH, that's what, the number 2 crypto. Algorand, I have very rarely heard of that, but I barely know what that is, as far as in name only. But thank you for letting me know. You just put it on my radar. Dan Smith, what's up, man? Welcome back, man. It's good to see you. You said Bitcoin is the safest. Yeah, it's number one. It's been that way for a long time. Bitcoin. Is it like 20? Last time I checked, it was like 20,000 US dollars equivalent. But it was up to like what, 70K? It was insane. All right, so next story. The CFPB addresses junk data in credit reports. So this is going to be important for everybody. The CFPB recently issued an advisory opinion to consumer reporting companies about their obligation to prevent obviously false junk data from appearing on consumer credit reports. The opinion states that companies must take steps to reliably detect and remove logically inconsistent data from consumers' credit reports, such as information that is obviously impossible. So this to me, this brings to mind like, you know, phone numbers, addresses, and names. So I guess it's just keeping them honest so that you don't have to reach out and say, hey, that's not me. So that seems like a good thing. I hope the CFPB, you know, stays around for a long time. I get a lot of information from their surveys or their articles and their studies that they do. And they seem to really be, I think on a weekly basis, I see them active and like, you know, in policing these financial institutions. So I think it's good that they're around. More people need to know that they are here. They were established like 10 years ago. Also, Greenlight launches a family cash card and offers parents up to 3% cash back on every purchase. So Greenlight, the fintech company that's on a mission to help teach children about personal finance, has introduced a new credit card specifically for parents. This is an interesting segment of the market. The Greenlight Family Cash Card allows parents to earn rewards and save for their family's future by offering up to 3% cash back on all purchases and the option to automatically invest rewards in stocks and ETFs, all for no annual fee. I love that. I love that. No annual fee. It originally launched in May with a waitlist, but now available to the general public. So let me know is this something you'd be interested in? If you have kids, would you be interested in a card that's like focused on, you know, offers you a lot of permissions and a lot of insight into what your kids are spending, and, you know, a lot of kind of allowing them to have a card but safely use it, and teaching them kind of, you know, inside of their account, the best way to use their money or invest it. Is that something you'd be interested in? Next, we have inflation relief debit cards to be sent out to California. So, Danny, this is for you, okay? This is your state. Debit cards with inflation relief payments will be mailed out to millions of Californians starting Monday and should arrive in mailboxes over the next few weeks to help ease the pain of increased prices. The California Middle Class Tax Refund program aims to soften the blow of rising inflation through a one-time payment ranging from $400 all the way up to $1,050 for couples who filed jointly on their 2020 state income tax return, and $200 to $700 for those who filed independently. So, Danny, let me know. And anybody else, are you in California right now? Would you qualify for this? You know? And if you're not in California, what part of the country are you from? I've never asked that question in my audience. I want to know, where are you from or based out of? That would be interesting. Let me know in the comment section. Where you from? Nino, hey, Nino, what's up, buddy? You said you Nino's in New York City with me, so I know you're. Cheryl, what's up? Nino, you're in New York City. I know for a fact. Alan Thomas, what's up? You said Illinois. Illinois, what's up? I've never been to that state, but I'm sure it's nice there. I think I've been to no, I have been to state. I've been to Chicago. What am I saying? I've been to Chicago a couple of times. I know Grand Rapids is pretty big. Hawaii, Fred says he's in Hawaii. I have somebody watching me from the state of Hawaii. That's cool. I've never been there. That'd be cool to go to Hawaii. I know it's expensive there. Arizona. L Foods from Arizona. Cheryl, you're in Orlando, Florida. Big ups to Florida. I love it there. All right, Shanika said Pennsylvania. Go Eagles. Now, I have family. My sister lives in Philadelphia, so I've been to Pennsylvania quite a few times, dozens of times at this point. So I like Philly. Big support group said Ohio. Ohio's in here. I don't have much knowledge of Ohio. Never been there. Midwest is kind of a untapped territory for me. Kansas. Nice. F. Davis is in Kansas. Yo, Nino said money making Manhattan. Manhattan, you gotta make some money to live in Manhattan. Am I right? Have you ever seen Cash Jordan and he tours these apartments in New York City, and you always see like the smallest place, and it's like you're like, man, this can't be nothing to pay for, and it's always like $4,000. What? You see this, like, it always blows my mind when they go in New York City and you see every apartment is different. There's no standard, right? And you see the stairways if it's a 2-floor, and they're always steep as all get out. They have some interesting spaces there. Joan, you said Space Coast, Florida. What's up, Joan? Pittsburgh, Pennsylvania. Dan Smith. All right. Danny, of course, is in Cali. Danny's in Cali. All right. I don't have anybody from the Southeast. I'm from South Carolina. Do I have anybody out there in the Southeast region? I would love to say what's up to you. Got a lot of Ohio, Pennsylvania. Virginia Beach. Kenneth Fairbanks. Virginia Beach. All right. See, that's what I was waiting for. Sergeant King is in Georgia. I love Atlanta. So I've definitely visited there so many times. It's great. All right, man. Thank you for letting me know where you're from. Now I got an idea. Let's talk about this inflation though in California. So, all right. So Californians, you should know that this is going to be some assistance for you. Do you think this is actually going to be a good idea to give? I mean, you end up paying for this down the line. It's kind of like kicking the can down the road. Whenever they give like free money out to, the citizens, it ends up just kicking the can down. Yo, I got Franklin L. Foster. Franklin, you in my hometown. What you doing? Are you actually from there? Or are you just visiting? Or are you Columbia, South Carolina? That's exactly where I'm from. Spent almost 30 years there. That's good to see that. Most of my family's there. What's up, Franklin? I'm glad that you're on the stream with me. So, next door we have. Okay, Franklin said Northeast Columbia. Northeast. I used to live in Northeast. Yep, I know exactly what you're talking about. Two Notch, near Two Notch, and where were you out there near? Was it? Near Pontiac. They've been building out on Clemson Road a lot recently. That's good to hear. So, why is it easier to get a new car than raise current limits? This was a question that somebody asked on a forum, and I thought it was really interesting. He said, as an example, I have had a car with Discover for 4 years. 4 years. I have tried multiple times to have the limit, which is $2,000, raised. They always refused. Yesterday, I decided to apply for another Discover card just for the heck of it. I was approved for a $7,000 limit. If I can be approved for a new card from the same company with a higher limit, why couldn't I be approved for a credit limit increase with the card I already have? In fact, the score they approved the card for was lower than when they rejected the request for a credit limit. So, one person chimed in and said, if you're reporting to Wall Street and beholden to shareholders, would you rather have a higher credit limit on one account or multiple accounts opened? From their perspective, if they're going to take on the liability of your credit limit, they might as well be able to report a new account opened. In this way, the benefit is bidirectional, so it's going both ways for both company and client. I'm not making a judgment on values. I'm just saying that this is likely the reason why. This sounds like it makes a lot of sense because as we saw with like Wells Fargo, they got in trouble for opening fake accounts, additional accounts on customers. And they did that because they were incentivized to open new accounts because they got paid based on that. So the more accounts they open, it seemed like good performance. The company could report that to the shareholders, and then that raised their stock value and raised everybody's, bank accounts by doing that. So this makes a lot of sense to me. And also you should know, with credit cards like Capital One, they're known for bucketing people. And what happens is at the time of approval of that credit card, depending on what your credit score and credit report looks like, they could put you in a bad credit score bucket, and that would just confine you and restrict you to a low credit limit. And so anytime you go up for a credit limit increase, they would either deny you or they would just give you a super low credit limit increase of like $100 to $500. So that's what people have found. But when they apply for a new Capital One card, after some time passed and their credit kind of report, became more favorable and their credit score increased, then they found that they got approved for a Capital One card in a new bucket, a better bucket, where they got approved for like a $10,000 limit, and they could get an increase pretty much every time they asked. So I thought this was an interesting point, and it seems like it's really close to the truth. F. David said Capital One is the bucket kings. They wear the crown for bucketing people. I would have to agree with you that on that. All right, next door we have Upgrade launches high yield savings account offering of 3.5% APY. So Premier savings accounts are available in all 50 states and require a minimum balance of $1,000 to earn the 3.5% interest rate. I want to really, before I even forget, I want to make a note of this, that they require that $1,000 limit. But oftentimes I've seen when banks, when relatively small banks introduce these like eye-catching interest rates, it's just for a short period of time. They'll do this for like a year, and then they'll chop it back down to something more normal. And I think it's a little shady, a little underhanded tactic that they just give you that eye-grabbing interest rate just to get signups, and then they'll just pull it back. So I wish that they were kind of required to hold to that for a lengthy period of time, because that's something that people expect to remain constant. The APY for the Premier Savings account is variable and may change at any time. So they tell you on the outset, but most people are not going to see that. There is no minimum balance to open your account, but you will only earn the APY on days when the closing balance of your Premier Savings account is or exceeds $1,000. So on days where the account closing balance drops below $1,000, your APY will be 0%. So instead of dropping you down to like 1 or 2%, which would be like reasonable, they're just going to drop you down to 0%. That's messed up. It offers fully interoperability with thousands of US banks, and users can request same-day transfers to and from any bank. I like that. That's a really bright spot, because usually when you try to transfer money from bank account to bank account, it takes like, a few business days to clear. So that's a nice feature there. And so basically you can just tack this account onto your existing bank account. So if you just wanted to try this out, if you bank with like Chase or Capital One or SoFi for me, you could just kind of dip your toe in this just initially to see what it's all about, and then instantly transfer your money back out. It's super liquid. So Upgrade has a few credit cards that they do things a little bit different over there. I'm not very familiar with Upgrade's the inner workings of their credit cards, but they're not very popular. But I haven't heard too many bad things. If you have an Upgrade account, let me know. And how do you feel about their customer service? And do you like their credit products? Because I haven't even like discussed this with anybody. All right, so US Bank reveals data breach involving some credit card accounts. US Bank is notifying some of its customers about personal information that was accidentally shared by one of the bank's third-party vendors. According to a draft letter posted to the California Attorney General's website, about 11,000 customers were affected after the vendor, a collections recovery group, accidentally shared the info, a U.S. bank spokesperson told NBC News. The incident occurred on September 27th and involved the sharing of information, including names, social security numbers, closed account numbers, and outstanding balances. Customers with closed U.S. bank credit card accounts were affected, the letter states. So if you have a U.S. bank card, just kind of be aware that there was a data breach, and these things tend to go kind of unnoticed and not very well covered. So just be aware of that. All right, so here's a story that I found on very interesting, posted kind of on some other YouTube channels. And it said 10 million more people could qualify for mortgages thanks to new credit score rule. All right. So Black households in particular are expected to benefit. All right. One Monday, I should have included that later. On Monday, the Federal Housing Finance Agency announced that it will require mortgage lenders to incorporate credit scores from VantageScore when evaluating potential borrowers. So if you don't know, your VantageScore is that score that's offered in like Credit Karma or probably half of the banking apps, they offer the VantageScore. The thing about Vantage is that it's not used for a lot of industries, especially for credit cards. They never use the VantageScore. So it's kind of like a misnomer to actually look at that and think that you'll get approved based on that. They're going to use your FICO bank card score for credit cards. A lot of people also don't know that there's like 40 different FICO scores, and that the FICO scoring model is going to be based on the industry. So it's good. They have an auto industry based FICO score. They have a mortgage industry based FICO score. Those are different. And they also update these scores every like 5 years. But here's the thing. What you got to know is that you really have to kind of do your research on that particular industry, because a lot of times they will continue to use the same FICO scoring model for 20 plus years. And say they will never update to the new one until a situation like this. So take a look at this. Lenders will also need to transition to a new version of the FICO score for the first time in nearly 2 decades. Critically, both the VantageScore and the new FICO score will include information about a borrower's rent, utility, and phone payments. Requiring both credit scores when available will result in more borrowers that can be evaluated, said the FHFA. And another thing to note is the VantageScore estimates that it can provide credit scores for 37 million people that the FICO score does not currently capture. Of those, the company estimates that 10.7 million will have a score of 620 or above, including approximately 4 million minority borrowers. So that's where they get in the black folks or minorities will be helped out by this. So the good thing is that, more people will qualify for these FHA loans, which you require 3.5% down to get a mortgage. So that's nice. And now people can really use the Vantage score. So some people don't have access to the FICO score. And if you go to the FICO scoring company itself, you can get one of your scores, I believe, free. But then it's not going to be that particular industry score. It's just going to be, it's not going to be based on the particular industry, like a mortgage. It might not be exactly the same. So if you want those particular scores, you have to actually pay for that in many instances. And finally, actually, before I get to the next slide, I'm going to say, DJ Bruce Wayne, you said, did we talk about Elon yet? So exactly what about Elon did you want to talk about? Let me know in the chat, because I'm always kind of keeping up to date with him, but I don't have any slides on him yet. Also, I took a poll from you guys. You said, what have you been able to negotiate from credit card issuers? And the options were refunded interest charges, which is 13%, statement credits, 13%, turn denial into approval. That was the biggest one, 31%, which is great. You were able to actually reverse that, they denied you and you were able to call into the reconsideration line or customer service, and you actually were able to get approved for the card. I love that. 22% said waived annual fees. So that reminds me of something like the Amex Platinum card with a $695 annual fee. Maybe you can get a statement credit for that. or partial credit. It's always good to get. And lower APR, 21% said. And I made a point of this in one of my videos, is that it's really good to see that you guys are able to negotiate. And just remember, in life, just about everything is negotiable. So if you don't know, or if you see something that you want to change, just ask. It never hurts. I've heard good things about Discover, where you call in and say, hey, I want the intro bonus that you guys are offering now. I've heard some people were able to get it. Oftentimes you're able to lower your interest rate if that's important to you, but it's always good to call and try. And sometimes you want to try another customer service agent. If that one is not having a good day, they're not going to act in your favor, and maybe it's as well within their control what happens in your situation. Alan Thomas, she said, I want to highlight this. She said, Cal, would love your feedback on Capital One not giving big boosts, even though you have had steady payment history and automatic upgrades and increase in limit. So when you say big boost, you're just like a big credit limit increase. I just want to speak to that. If you're talking about credit limits, I found that the maximum limit increase Capital One will give is $1,000, which is really low compared to other issuers. But they will put you in a bucket. And I'm actually going to talk about this in my next video, which is going to be increase your Capital One credit limit twice in 60 days. And so I just kind of deploy a few different strategies. One was product change. Another was asking for the increase, so manually requesting one because it's a soft pull. And I added my wife as an authorized user, and there was a fourth one. I can look back at my notes, but just kind of combining those strategies I found to be effective for me. But I think I was already in a favorable credit bucket. I hope some of that answered your question. Also, Nino, thank you, sir. Thank you, Nino, for the super chat. You didn't say anything. Usually you tell me exactly what I should be using it for, like some bagel, or like a English McMuffin or something like that. But I'm just gonna add it, to my my DoorDash fund. That's what I'll do whenever I order something to eat. Thank you, sir. Appreciate you. Been there, and Nino's been here since like early this year when I started these live streams. So definitely sentimental, because I started like in January. Nino's been there since day one. Yeah, Ernest, he said, I tried the product change and not eligible to do it. I'm trying to product change to the Saver card to get more cash back. Now, I want to say in particular, the Saver card, I haven't heard about anybody. I don't think anybody has been able to product change to a Saver card. I've never seen a Saver card available to product change into. And I actually saw the Venture X card, which is their flagship card. So for some reason, the Saver card is just some other like part of the company. And I'm not sure what's going on with that. I want to know, guys, I got something special planned here. Let me know if you were increased for a, did you get a credit limit increase over the past week, or did you get approved for a credit card? And if you did, what was the starting credit limit? I want to know. I want to celebrate you guys, and let's talk about it. Let's talk about it. Yo, I'm setting a record tonight. 78 people. If you're in the chat, let me know you here. Say what's up. I wanna talk to you. All right, Just Rhyme said, yes, sir. I got my Chase Unlimited card and went from 2,000 limit to a $3,700 limit. Congrats on that. Let me give you some. Let me give you some applause on that. Actually, I'm just gonna go ahead. Let me switch cameras here. I'm gonna go ahead and shoot my money gun for you. Right here, I got a gold money gun. All right. 3,700. I like that. Who else got some who else got some cash or a credit limit increase? Good job, just rhyme. Lunchbox 701, you said Amazon Business Prime approval. You got an $8,000 star limit. Lunchbox, you get it too. I'm gonna make this whole room messy by the end of the night. I'm gonna spend like the rest of the night picking up these $100 bills. Don Johnson said, "Is that real loot in that gun? I need to borrow that at the club." It is not. This is completely phony, fake money. All right. Joan got something too. You got something for me. Capital One Quicksilver gave me an automatic limit increase of $3,000. Starting limit $2,000. Now available credit $5,000. Okay, so listen, Joan, you are proving me wrong here. You can get, if you have maybe a lower starting limit, you can get a higher than a $1,000 credit limit increase. So Joan, good job on that. Joan, definitely getting a money gun. That's for you, Joan. That's for you. All right. Yeah. Jay Claiborne. We celebrating all the wins over here for sure. For sure. Yo, great. Gary Graycar, and I believe you said I want one of those cash dispensers. Well, Gary, I can link one up for you. I think I have it in my if you look at my Amazon store, I have a link for you. Hold on. I'm missing somebody. I gotta find you. F Davis, thank you, sir. Hold on, let me switch to F Davis. Thank you, man. He's one of my channel members, and dude, it's good getting the feedback from you that we talk about on the channel page. On our remember we had some fun laughing about what's his name? What's that rapper's name that got gypped out of $2,000 recently? We had some fun talking about that. Thank you for the super chat. You said, you said, I can't forget this. Love the money gun. Yes, I thought it would be a good idea. So I definitely had to grab that up. I'm glad you like it. Just Rhyme said, thanks for the videos, man. Keep it up. Keep it up. I will. I will definitely keep it up. They're coming. More videos coming. Yeah, Cheryl said the money gun is a hit. I'm glad you guys like it. All right, am I missing somebody though? Oh yeah, L is not taking an L tonight, okay? L said $200 secured visa to unsecured. So you graduated from $200 secured card. You graduated, you leveled up to an unsecured $5,000 card with your local credit union. Well, guess what? You're getting the money gun as well. How much money do I have in here? I am not sure. I am not sure. Congrats on that, L. DJ Bruce Wayne, thank you, sir. You said make it rain. I will definitely be making it rain tonight. Thank you guys. It's really good to see, so many different people winning. I love to hear about it. Someone spoke about Elon Musk, so I definitely want to tackle that topic real quick. Now I can't even find it. Don Johnson, you said, Cal, I obtained over $100,000 across several credit cards. How do I level up my business? Oh, that's a tough, Don. You hit me with a tough one, though. How do you level up your business credit? I'll have to think about that. We got to have like a longer discussion. I might not even be able to have some information for you. I kind of talk about consumer credit card side mostly, and that's where I've done a lot of my research on, and just kind of like scoping out what people, what other credit card holders are experiencing. That's what I have knowledge on. Gentile, you said, I got a starter card 1 year ago. It was $300 and it went to $2,000 with no increase. Well, that's an increase. You mean with no like manual increase? It was like an automatic increase? Let me know. Yes, and Danny said, hit that like button. Please hit that like button. If you want to see me shoot this money gun off, and I'm gonna probably get some more props, then hit that like button for these props here. Joe said, what do you guys think about the Capital One Saver Card? Listen, you get 3% back in entertainment and dining. I think there might be a third 3% category. It's a decent card, you know. I've heard nothing but good statements about it. So definitely, I've had the Saver. I had the Saver card, which has a $95 annual fee, but I would only go for the Saver One card, just because it's a no annual fee card. Listen, when you have other cards competing hard out here with the Wells Fargo autograph card, you're getting 3% back in 6 different categories. It's tough to. It's a competitive marketplace, but I'm okay with the Saver One card. Yeah, Jay Clipbourne, thanks for correcting me. You said 3% back on streaming services as well. Yep. Gentile, he said you got an auto limit increase. So you went from, Gentile, I want to find your first message here. You said you went from $300 a year ago, and this year you went to $2,000 automatic increase. Money guy. You got it. I want to let you guys know about my, oh, Danny, thank you. You said Team Amex Blue Cash preferred. So thank you, Danny, for the $10 super chat. I appreciate you as always. I want to let you know my next video is going to be on the increasing your Capital One credit limit 2 times in 60 days. That's going to be, the name of the video. So stay tuned for that. Working on it. And thank you for hanging out with me tonight. I'm going to be live streaming again, like always, next Sunday at 7 p.m. So join me there. And you guys have a great week. All right. Cheryl, I had to come back. Thank you for the super chat. I really appreciate you. I can't leave that unnoticed. I really appreciate you sticking with me, and I'm going to see you next week, okay? Have a great week.